right, good morning. It's 6:30 on Wall Street, and this is when we like to answer a lot of the questions that have been coming into Finest. So Luke, what do we got?
Hey Tim, so with the ongoing war, a lot of investors are thinking of selling their stock. What's your take on that?
Okay, with the war, should I sell my stock, right? Should I get out? What you're really asking about is market timing. Is when something happens in the world, do I have the ability to foresee which way the stock market is going? And you know, it's a bit of a fallacy. A fallacy is something that should work on paper, that sounds good, that logically should be a thing, but historically, time and time again, and behaviorally, just doesn't work in reality, right? When we see an event and we try to guess which way the market is going, the macro market, I'm not talking about a single stock, a lot different, the macro market, and I try to move all of my money in one direction, I'm usually confusing activity with accomplishment. Part of long-term investing is dealing with that volatility, but also using that volatility as an opportunity.
Alrighty, so if you can't time the market, then what would a smart investor do?
That's a good question. You have a few options. If you have a larger portfolio with a financial advisor and they have dry powder, right? They have some cash, they have some historically negatively correlated assets like gold or energy or T-bills or something. There will be, during a period of volatility, when the market pulls back, an opportunity to sell those assets that maybe did better, maybe did less worse, and buy low and take advantage of that volatility, right? But the reality of long-term investing, if you're not market timing, is you kind of have to deal with that volatility when it comes and use that volatility as an opportunity instead of trying to time the macro markets. Because Luke, when you do that, you're asserting that you're smarter than the global collection of traders and institutions and computers that have already priced this in. The risk with this war specifically, because I think that's what you're getting at, that it sounds like I'm evading, but I'm not. The risk with this war is that the Strait of Hormuz stays blocked. Energy prices skyrocket. Those energy prices leak into the rest of the economy, create inflation, and as a response, the Federal Reserve has to raise rates. That's a situation that would hypothetically be bad for stocks. But I have to tell you, again, there's so many macroeconomic factors that can drive things the other way. The best thing you can be is not a genie, not a prophet, but an opportunist if the market pulls back. That's all the time we got.
All right, thanks Tim.
Let's get to work, man.